Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Asian tech stocks fall after Apple's China revenues disappoint, but Amazon and Intel both surge after beating estimates. Boeing shares take off after the embattled plane maker reaches a provisional deal with union leaders to end the long-running strike. We'll bring you all the details. Plus, calming the markets. Britain's Chancellor tries to reassure investors after her budget triggers a sell-off in UK bonds. We'll bring you our exclusive conversation with Rachel Reeves. Very good morning. Happy Friday. Hope you had a good Halloween yesterday. It was indeed a spooky end to the day in markets. Checking in on these markets now. A spooky end to the month as well because of some of those tech earnings yesterday. But if you look, futures are pointing higher as we get towards the end of the week now. Flip the board over to the cross-asset picture. And thinking about the end of the month, Treasuries have finished the month lower on bets that the Fed isn't going to be too aggressive in its cutting, given the strong economy. The two-year Treasury yield currently at 4.16%. The dollar saw its best month since 2022 in October, and the pound has still been pretty knocked by that UK budget. $1.28 is where we trade currently. Of course, fears that the Bank of England isn't going to be able to cut rates as fast, but Brent jumping to $74 a barrel on the latest news out of the Middle East that Iran is planning a fresh attack on Israel. We're going to break down all of those stories throughout the programme, but let's go over to Asia now. Avril Hong's on standby for us in Singapore with an update on how markets there are faring. Avril.
Yeah, Lizzie, we're seeing a mixed bag in the region with Japan, the key drag. The Nikkei has extended losses, accelerated those into the close. 2.6% down is the steepest decline since late September. Of course, this is humming against the backdrop of the relative strength that we're seeing in the yen, given what we got from the BOJ just a day ago. I'll talk a bit more about that in just a bit, but also wanted to highlight what we're seeing in China, which is today the outlier after data that seems to show how stimulus is working its way through the economy as well as sentiment. We saw data on home prices that rose for the first time this year for the month of October. And then you think about factory activity based on a private survey, the Tyson number showing unexpected expansion. But if you look at the currency, you're still seeing that weakness both onshore, offshore. Flip the board, take a look at this chart, which shows you the options 1 week implied volatility and how it has surged to a record. And this tells you what traders are bracing for next week, not just US events, but also China's top legislators are meeting, and traders are really watching out for what stimulus we can potentially see. And this is especially if we do indeed see a Trump victory. Flip the board again, take a closer look at what we're seeing in Japan. And this chart will show you the relationship between the Japanese currency and stock market performance. If we can take a look at this next chart, and it'll show you how it doesn't bode well for Japanese stocks if we do indeed see more yen strength. And that seems to be the bias given how traders are bracing for rate hikes from the BOJ in the months ahead. But it's not just about the yen. Keep in mind that we are in the early days of reporting on corporate earnings for the MSCI Japan companies, but already about half of them have disappointed. So it's about the macro, it's about the micro, and specifically the earnings story as well. Lizzie.
Avril Hong in Singapore, we thank you. We're going to continue that Asia theme into the latest news from the latest big tech earnings. We had Amazon climbing as numbers topped estimates, but Apple sparking fresh concerns about revenue growth and lingering weakness in China. CEO Tim Cook says iPhone sales were globally strong, though.
iPhone grew in every geographic segment, marking a new September quarter revenue record for the category. And services set an all-time revenue record, up 12% year over year. We also set September quarter segment revenue records in the Americas, Europe, and the rest of Asia Pacific, as well as in a large number of countries.
Let's get more now from our tech reporter, Annabelle Drewlers. Belle, take us away. Apple and Amazon, what happened?
Well, it was kind of like two different themes going into the holiday quarter, because on the one hand, you had Apple really kind of casting a bit of doubt on their demand outlook. So they essentially said that they're going to see growth in the period in the low to middle single digits, and also just that demand around iPhones in particular. Yes, he was optimistic there on the different geographic segments, but in the fourth quarter readings that came through, we actually saw weakness in the Chinese market in particular. So sales of $15 billion, we had been looking for around 15.8 instead. So undershooting estimates from Wall Street and telling us perhaps that this is a really key market for the business, and they could be losing ground to local players like Xiaomi or Huawei. Amazon was actually a really different story for their forecasting, because going into the holiday season, they're actually seeing strong sales growth, and they're looking for up to $20 billion in the period ending December. The estimate from analysts had been put 17.5. So again, quite a big jump there on what Wall Street was tipping. Strong figures there, also strong figures for Amazon's cloud business, AWS, that's seeing growth. And so it kind of just plays into what we'd already seen from Alphabet earlier this week. Microsoft as well said they had strong demand. Yes, they don't have the capacity for it just yet, but they still have strong demand. So it tells you, again, that AI theme still playing out.
And meanwhile, Annabelle, optimism around Intel?
Yes, finally some optimism for Intel after what's been a very rough period for the company. This was once one of the biggest chip makers in the world, or chip designers. It's now anything but that. It's really struggled in a lot of different ways. But we did get optimism not only around their plans for their AI accelerator, and we heard from Pat Gelsinger, for instance, talking about the demand outlook for Gaudi 3. Then we also saw some optimism around the foundry business, and in the latest reporting period, we actually saw AWS, for instance, signed as one of the key customers. And so Intel, their fourth quarter revenue forecast beat estimates, so they're now seeing sales of up to $14.3 billion. The estimate had been for 13.6, and certainly the share price reaction. I mean, you can see that drop really on a one-year basis with the concerns that they were really losing their edge in the market. Overnight, though, in late trade, we saw it jumping as much as 12%, given the optimism. Perhaps that turnaround strategy is starting to take effect, or perhaps also just a bit of a relief rally that we didn't see such negative quarters from earnings reports past.
All right, Bloomberg's tech reporter Annabelle Drulers, we thank you for that update on those tech earnings. I also just want to get to some breaking earnings from Nomura. We have learned in just the last couple of moments that profit rose more than analysts expected in the last quarter. It's been buoyed by these strong results across its businesses, wealth management, trading, investment banking as well. Net income, particularly one to watch. It's more than doubled from a year earlier, 98.4 billion yen. I mean, this is really marking the recovery path that Nomura's been on, now in doubt because of the revelations of market manipulation that came to light in late September. As we speak, the company is giving a press conference on these results in Tokyo, and the scandals really are mounting and threatening to derail the turnaround plan. Of course, Nomura is Japan's biggest brokerage, and the company's CEO and other top managers agreed yesterday to take a pay cut after Nomura admitted that an employee manipulated the bond market. It's prompted several firms to stop trading with the brokerage, and the company's actually under further pressure after a local news agency reported that a further Nomura worker was arrested on suspicion of robbery and attempted murder of elderly clients. So that press conference ongoing. But as the US presidential race enters its final few days, we're going to get crucial data about the strength of the labour market. That'll take centre stage for markets later today. We can get a preview now from Bloomberg's Valerie Teitel with all the details. Val.
Good morning, Lizzie. It takes center stage today with the non-farm payrolls print comes an hour earlier than usual at 12:30 UK time. The consensus estimate is for 100K, the unemployment rate to stay the same at 4.1%, and for average hourly earnings to stay consistent at 4%. Let's flip the board, though. There is some things that are a bit unique about today's print, one of which is that the range of estimates is the widest that we've seen this year. It goes all the way from negative 10K 100K to 180K. And that's all due to the very opaque effects of Hurricane Milton, Hurricane Helene, and the Boeing strikes that are still ongoing. But if we do get this estimated 100K payroll addition, it would be the lowest reading in 4 years, Lizzie. And if we just look about how we've traded in the last month, there's been a really bruising session for the bond market in the last few weeks. We're 54 basis points higher on the 10-year yield. The risk in this print is that we do get a hot print, and it stokes those fears about the hiccups around a hurricane and the Boeing strike, and we price out more expectations for Fed easing next year.
Indeed, a weird month for the data. Valerie Titel, we thank you for the preview. We'll be watching at 12:30 UK time, an hour earlier, as you say, when that drops. But turning to the Middle East now, because we are seeing Brent higher nearly 2% now at $74 a barrel. This because top US diplomats have visited the Middle East to try and secure a pause in fighting. It's just days ahead, of course, of the US election. And it comes as Axios is reporting that Iran could be preparing to attack Israel from Iraqi territory in the coming days. Let's get more now from Bloomberg's Dan Williams. He joins us from Jerusalem. Dan, just take us through the latest on these possible ceasefire talks.
Well, fighting continues. There have been Israeli airstrikes overnight in Beirut. And yesterday, in one of the worst days for Israel on the Lebanese front, 7 people were killed in 2 separate incidents in northern Israel, 4 of them foreign workers on a farm, by Hezbollah shelling. So on the ground, it would appear things are unchanged. The fighting remains ferocious. But as you noted, 2 U.S. envoys were in Israel yesterday to try to prod ahead a proposal that would, if implemented, would remove Hezbollah from their country's border, would institute some sort of mechanism for disarming Hezbollah, for ensuring that it does not receive fresh weaponry from Iran, and might even incorporate Lebanese military in that implementation, which would be in itself unusual given that the Lebanese state and Israel are technically in a state of war. Now, there has been some optimism in Lebanon about this. It would appear that would have been premature. If anyone was expecting a breakthrough before the U.S. election, that does not appear to be happening. And indeed, those 2 envoys on this trip at least do not appear to be continuing to Lebanon. So for now, discussions appear to have centered on Israel, where the Prime Minister, Benjamin Netanyahu, has basically said paper must be backed up by power, meaning whatever UN resolutions are enhanced as a result of this deal, he will still want force of arms, specifically Israeli force of arms, to be available in order to back this up and ensure there are no infractions by Hezbollah.
OK, so the US role in this perhaps somewhat moot until after the US election. I also wonder how seriously we should take Iran's threats to counterstrike against Israel. Were we not waiting for this until after the election? Was that not the expectation?
Well, there are many moving parts. As you noted, there's one report suggesting Iran could attack Israel from Iraqi territory. Presumably, if true, the advantage then would be shorter flight times for those missiles, whatever is fired at Israel from Iraq, which would make it difficult for Israeli air defenses to shoot them down, as they managed to do on the previous 2 rounds of Iranian attacks from Iranian territory. Now, it's not a big surprise. Iran has said it could respond or would respond. Israel assumes it would respond. As you noted, there's a big question of whether it happens before or after the U.S. election. Presumably, if it happens before the U.S. election, Israel might think twice about escalating further, given the outgoing Biden administration's being really rather keen to avoid any major upset in terms of foreign policy and the Middle East. However, Israel says it's ready to strike back. And indeed, the Prime Minister Netanyahu said yesterday that it has a longer-term view on Iran. It has plans in the works to prevent Iran from developing a nuclear weapon if that's what Iran chooses to do. So the Israelis are certainly looking ahead for a long-term confrontation or a longer-term confrontation with Iran that may simply be divorced from the U.S. electoral clock.
OK, Bloomberg's Dan Williams in Jerusalem. We thank you for monitoring all of that for us. And coming up on Bloomberg Daybreak Europe, Boeing offers a sweetener in the latest bid to end a crippling strike. But will the deal get off the ground with union members? We'll get you the details next. This is Bloomberg. Well, Boeing shares jumped in late trade as the union representing 33,000 striking workers reached a tentative agreement to end their dispute. The deal would boost wages by 38% over 4 years and give workers a $12,000 signing bonus. Will it be enough to get it over the line? Bloomberg's Danny Lee joins us now, our transport reporter. Danny, fourth time's the charm, will it be? What are the chances that this will be voted through this time?
We are closer than we ever have been to a deal, and we've said that many times now. And this effective pay raise would be equivalent to 43%. And so that's more than what the union had originally demanded for before they went on strike. And so therefore, given how much the rejection was last time, 2/3, it was not going to take much to get Boeing to improve their offer. But significantly for Boeing, it's not going to have to pay or transform its contracts by changing its pensions, which is what the union wanted to do in the first place. So I think we are much closer, and there is a lot of optimism that when this vote takes place on Monday, that this deal will finally go through and potentially settle 7 weeks of striking.
Danny, it seems like things just keep getting worse for Boeing. What's at stake here for workers, whichever way this vote goes?
I think the risk for workers is, and this is something that the union leadership have warned, this is probably the best you're going to get. So, to reject this time round would be devastating, and it's something that they may not be able to come back from. And again, you can see the kind of tensions in the union front line because of the amount they've not been able to get paid because they've been on strike for so long. And given the risks around this presidential election, this changing administration potentially, that this is something that with the government having to be involved, there may be differing positions, and therefore the union may not get what it wants next time. And for Boeing, clearly assessing it would be important for Kelly Ottberg to then focus on righting the ship fully for Boeing.
All right, our transport reporter Danny Lee, we thank you as always. Happy Friday to you. Coming up, we're going to look at how the US election could affect the country's momentum towards green energy. Stay with us for that. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe at 6:21 a.m. in London, and Spain is deploying 1,700 soldiers to assist in relief efforts and rescue victims trapped by storms that have killed more than 150 people in the country's east. The extreme rainfall triggered one of the country's worst natural disasters in living memory, and the National Weather Agency says one town saw as much rain in 8 hours as it normally gets in a year. So we'll continue to monitor that story for you. But back to what we're really looking forward to next week, which is, of course, the US election just 4 days away. And climate action is one of the big issues on the ballot. Here to tell us more about what the result could mean for the country's clean energy momentum is Meredith Annex, Head of Clean Power here at Bloomberg NEF. Good to have you with me, Meredith. This is a really interesting report you've been doing. Two very different versions of the US energy transition on offer at this vote. How could the election impact the renewables story?
So the U.S. renewable energy space is on really solid footing right now. When we take a look at what installations are likely to be for 2024, we're seeing a 25% increase in annual installations for wind, solar, and energy storage in the U.S. And if we take our projections out to 2035, we see 1.1 terawatts being installed, which is more than triple the amount that was installed over the past 11 years. So that's a huge growth story. A lot of that's being driven by solar. And the reasons are a few. So we're seeing renewables that are competitive against natural gas-fired power generation. We're also seeing strong demand from corporates and utilities to meet their green energy offtake targets. And we're seeing the Inflation Reduction Act tax credits coming in, which are making renewables economic earlier. And that's the dilemma that's coming in with this election next week. What we're finding is that Donald Trump and some members of the Republican Party are interested in a full repeal of those tax credits.
But what would be the impact if this signature climate law actually does get scrapped?
So it's worth noting we don't think that's a likely scenario. It's more of a worst case scenario. But we did model it because it's helpful for people to know what the impact is going to be. And in our modeling, we find a 17% reduction in cumulative installations through 2035. So that reduces our forecast by about a fifth. Another thing that we see is this boom-bust cycle that's been typical in the U.S. markets in the past. So in past cycles of tax credits, they've come to an end. You've seen a huge growth in development so that projects can take advantage of those credits. And then a bust in the market afterwards as that pipeline dries up. We would expect that cycle to come back into the market. Now, that said, it's short-lived. By 2028, we would see annual installations return to current levels, and that's just driven by the competitive economics.
But Meredith, where you say that this is the worst case scenario to see the Inflation Reduction Act scrapped, I wonder actually how likely that is when, you're seeing lots of Republicans actually voicing support for it.
Exactly. And that's where it comes down to. So to remove the Inflation Reduction Act tax credits, that's an act of Congress. You can't just do that as the president. So it means that the elections need to bring a Republican sweep of the House, the Senate, and the presidency.
Which could happen.
It could happen. But when we take a look at where tax credit values are going, if you look at manufacturing tax credits, a lot of that money is actually going to red and swing states. So you would have Republican congressmen who would need to be voting to remove a policy that's actually bringing economic benefit to their districts and their communities. We've also seen, as you said, 18 Republican members of Congress that have stood up and said that they're against a hasty repeal of the tax credits. And that's more than the projected majority that a Republican Party could have in the elections next week based on current polling.
So you've basically said that Joe Biden's policy has been supportive of the clean energy momentum. I wonder how much continuity you see from Biden's policy to Kamala Harris's policy. Is this an area where it would just be a pretty easy copy and paste job?
Yeah, we would absolutely see the Harris administration continue pushing forward some of the things the Biden administration did. Potentially could go further. Depends on what mixture she gets in the House and Senate should she win. One of the big things that we would expect to see under a Harris administration is more focus on permitting and grids. Those are the two biggest issues facing renewable energy developers right now in the U.S. It requires bipartisan support to fix, and a Harris administration is more likely to champion that issue. The other thing that we could see impacted between these administrations is the import tariffs that are coming in on equipment, especially solar modules. So both parties are discussing import tariffs on energy equipment, but we would expect a Harris administration to develop and design those tariffs in a way that's less disruptive to the industry.
OK, so kind of taking it on, developing what's already there.
Exactly. Very much a continuation of what you see.
All right. Meredith Annex, Head of Clean Power here at Bloomberg NEF. Great to have you with me to talk about that aspect of the election, a crucial aspect, of course. And if you would like to hear more from BNF's analysts, download the Switched On podcast on Apple, Spotify, or wherever you get your podcasts there. You can see it on your screen. I just want to check in on these broader markets as we get ever closer towards the market open. You've got futures stateside pointing higher after the kind of spooking that they got towards the end of the day yesterday after those tech earnings, some of them on the sour side. We also have European futures pointing higher as well. Checking in on the cross-asset picture, you've got the, if I squint, 2-year Treasury yield there, pretty steady at 4.16%. The Bloomberg Dollar Spot Index, really seeing its best month since 2022. But coming up on the programme, we're going to bring you an interview with the UK Chancellor as she tried to reassure the markets that her budget was responsible. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda. Asian tech stocks fall after Apple's China revenues disappoint, but Amazon and Intel both surge after beating estimates. Boeing shares take off after the embattled plane maker reaches a provisional deal with union leaders to end the long-running strike. Plus, calming the markets. Britain's Chancellor tries to reassure investors after her budget triggers a sell-off in UK bonds. We'll bring you our conversation with Rachel Reeves. Well, happy Friday. You've made it, and we are in a new month. Stocks ending the last month on a pretty sour note, selling off as we got some of those tech earnings later in the day. But futures now pointing higher on both sides of the pond. Flipping over to the cross-asset picture, we had Treasuries ending the month on a lower point on bets that the Fed won't be too aggressive with rate cuts, given the strong economy. The two-year Treasury yield now steady at 4.16%. The dollar seeing its best month since 2022. The pound, you're seeing it there, or are you? No. But the pound has been knocked by all these jitters about the budget. Brent, though, you can see there, $74 a barrel on these Middle East tensions, as we were discussing with Dan Williams, and it's trading up now 1.8%. So pairing some of the earlier gains, but still at $74 a barrel. Now, let's get to one of our top interviews, staying in the UK, where markets really have been digesting that new budget from Labour, the first in 14 years from the party. Just before the market closed yesterday, I got to speak to the UK Chancellor, Rachel Reeves, as she sought to calm investors. We've seen such a ferocious gilt sell-off. It's spreading now to stocks and sterling. Are you worried that we're heading for a Liz Truss situation?
The number one commitment of this government is economic and fiscal stability, which is why we put in place yesterday in the budget robust fiscal rules that we will meet 2 years early. There's a significant fiscal consolidation during the course of this Parliament that takes debt as a share of our economy from 4.5%, which is what we inherited, to 2.1% of GDP. And we've set out a framework for the second phase of the spending review based on the envelope that we set out yesterday. That will require difficult decisions, but they're ones that this government are prepared to make because we know the importance of economic and fiscal stability.
But Chancellor, your margin for error for meeting your main fiscal rules near historic lows. If there's even a minor hit to growth, you'd have to hike taxes more to hit your fiscal rule. That's not very stable for the bond vigilantes, is it?
We have more headroom than the previous government left us, and that is important to guard against those sorts of shocks. But we, in the budget yesterday, were open and honest about the scale of the challenge left to us by the previous government, but we have now put our public finances on a stable and a solid trajectory, including through difficult decisions on increasing taxes. We did increase taxes yesterday by £40 billion. That was necessary, alongside with the changes we've made on spending and welfare, to put our public finances on a firm trajectory, and that's what we did in the budget yesterday.
But how can investors believe that this is a one-off hit when you repeatedly said before the election you weren't going to raise taxes beyond your manifesto commitments? Now you've raised them £20 billion more than the fiscal hole the Tories left behind.
Well, we were left with a terrible situation by the previous government, a big black hole in the public finances, a number of commitments around infected blood and the post office scandal that weren't properly funded. We've now put all of that out in the open, and we've raised taxes in a way that now put our public finances on a stable trajectory. Indeed, the Office of Budget Responsibility confirmed that we meet both our stability and our investment rule 2 years early. That should give confidence, alongside what the International Monetary Fund said yesterday, that these were the right decisions for our public finances and indeed for growth. So you heard the Chancellor there trying to halt the sell-off in UK gilts, stocks and sterling yesterday. It really was a moment to be summoned to the Treasury. And you can see here she did manage to reverse some of the moves while she was speaking to Bloomberg. But let's get a read now on whether Rachel Reeves' message has truly cut through, a sense of where things are going to go today when the markets open. I'm joined now by Marija Veitmane, Head of Equity Research at State Street. Marija, good to have you with me. We saw that gilt sell-off spreading into stocks yesterday. The FTSE 100 down 0.6%, the FTSE 250 down 1.5%. Do you think that this is going to continue this morning?
Good morning. Unfortunately, I have to say that the stocks probably will be a bit of under pressure this morning, and not just UK stocks. So let's give Treasury some break. We know stocks have lots of beta. Tech earnings somewhat disappointed investors. So I think the mood likely to be sour everywhere in equity market, not just UK.
But do you think that the Chancellor gets why the market had this adverse reaction to her budget?
she probably did what she had to do for kind of the domestic economy, but gilts market is bond market right now is quite unforgiving. Any wave of kind of extra fiscal spending is problematic. Market doesn't like that. We see that not just in UK, we see it in US as bond yields are rising when people worry about probability of Donald Trump winning. We see interest rates even increased in Europe everywhere else. So there is a bit of contagion. So bond market is really on the edge for kind of looking out for this kind of fiscal stability issues, how they're going to be tackled, what they mean for monetary policy. So very unlucky with the calendar where she had to present. Should she present that budget maybe after US elections and kind of depending on results, maybe the reaction would be different. But right now, market is really not forgiving for extra fiscal spending.
Well, she might be hoping that the jobs report later takes a bit of the focus away from this reaction in the UK market. I wonder how many cuts you're expecting from the Fed before the end of the year.
We kind of see Fed as probably not, it's not for us that important how many cuts and when. I think the direction of travel is far, far more important for equity market. What equity market is generally saying is that Fed and other central banks are really focused on making policy monetary policy a lot easier. And fortunately for US, what we're seeing is that underlying economic growth is still resilient. So that, I think, the message that equity markets are really latching on. So in a way, we saw kind of increase in bond yield as market is taking maybe kind of expecting less aggressive Fed cutting cycles. That has not affected stock market. And I think that's kind of really taking a slightly more longer term approach. Rates are coming down, economic growth is okay, earnings are broadly okay, and hence equity can continue to be strong. So that's really important message for equity market.
Marija, where you really have faith is big tech. What would ever put you off that? We've had quite a mixed bag of tech earnings so far.
Yeah, absolutely. And I think with tech, tech earnings, there are kind of two very, very important messages. One is that current earnings are still very, very strong. So when we say overall equity earnings and corporate earnings in US are okay and robust, it's really just tech. If you look at S&P X Tech, earnings are flat at best. And there is a bunch of sectors where earnings are really declining. And it's really tech that's growing and growing consistently. And I guess what tech companies are doing with this earnings, the money they're making, is that they want to ensure future growth, future margin, future moats around their businesses. So they're investing a lot in AI. And I think it's a bit harsh for the market to expect those kind of AI investment to bear fruit immediately. Market needs to give time to those companies to kind of develop infrastructure, develop technology, find customers. And I think that there is some progress made there, and that's really encouraging. So for me, that's future growth, future cash flows, future business. It looks a lot more solid than any other business I look around in US or Europe.
As we look ahead to this US election, Marija, I wonder, are you worried about the impact of Donald Trump's tariffs here in Europe, not just on the sectors that he hit in Trump 1.0, but about more sectors being hit under Trump 2.0 if he gets in? I'm thinking about luxury.
Yeah, no, that's a fair point. That can potentially happen. So Donald Trump was one of those presidents who actually showed that what he talks during campaign trails often happens. So that's actually not given for many other candidates. Obviously events happen and you have to react. But European luxury goods, I think it's one of those sectors that already have enough trouble. The biggest consumer is China. That's falling the wayside. Underlying business is very competitive. We see middle-class consumer who was really the backbone, the kind of aspirational purchases. That's going on the wayside. And things like LVMH having decline in sales in their kind of main leather goods. That's a very significant milestone. So the sector is really on the backside. One thing I will say is that institutional investors that we track in our custodial database, they're very, very underweight sector and they're not buying. I think that to me is really, really telling. So positions are low, valuations are low, but people are not tempted in. So I think there are big, big risks in that industry.
Well, where you say China is falling by the wayside, I take it you think this stimulus is in no way game-changing for equities then?
I think we need to see more on stimulus. And I think what was really interesting, again, I mentioned this custodial database. We look at what institutional investors are doing. So when the first stimulus were announced, we saw very significant surge in Chinese stocks. And that's really slowing down since, so we had already about a month since the first policy announcement. It's really, really slowing. So investors want more and more clarity. And that's not happening. They're beginning to lose interest. Another really, really important kind of milestone for us would be, it's not just stock market. It's about like Chinese authorities trying to ignite this animal spirits in Chinese consumer. Will they go out and spend? Because we've seen kind of prices falling, the kind of deflationary trend. People worry about kind of Japanification of Chinese consumers. So we are kind of watching for that very, very carefully. So would the consumers start spending and where the money would go? And so far, the evidence is very, very mixed at best. So consumers still kind of needs more waking up.
All right, Marija Veitmane, lovely to have you with me. Always a sunny start to the morning. Head of Equity Research at State Street, of course. Marija, good to have you as always. Now, to other news around the world. Switzerland's finance minister is aiming to revamp banking regulation to ensure the nation's financial centre maintains its competitiveness. Karin Keller-Sutter spoke exclusively to Bloomberg in a fireside conversation in Zurich.
We have to find a balance between competitiveness on the one hand and the protection of the economy and the taxpayer on the other hand. We cannot be compared to the US. The US is a much bigger economy. I mean, if you have big banks in the US like Morgan Stanley, Wells Fargo and so on, and we just are compared to that, a small economy with one GSIB. So we really have to find a balance between being competitive, and the government really is committed to have a competitive financial centre.
Now to other stories making news this morning. Estee Lauder shares fell the most on record after the cosmetics giant pulled its guidance for the year. That's due to uncertainty over its new CEO, who takes over in January, as well as weak demand in China. The New York-based company also cut its dividend to what it calls a more appropriate level to create financial flexibility for the incoming leadership team. In other news, Bloomberg's been told that Alphabet's autonomous driving unit, Waymo, is valued at more than $45 billion after its latest round of financing. Waymo said last week that it had raised $5.6 billion in new capital at an undisclosed valuation. The startup is part of Alphabet's Other Bets portfolio of businesses, and Waymo is part of a large pack of companies pursuing robo-taxi services in the US. And OpenAI is adding a new set of search features to ChatGPT in its latest challenge to Google. ChatGPT Search will allow users to look for information as they would on the web, with attribution from news publishers and other data sources. The service will go live beginning with paid users this week, while free customers will have to wait another few months. Well, be sure to catch up on Bloomberg's new weekend edition. We're going to bring you a collection of ideas, essays, reviews, interviews and stories that explore the fascinating places where finance, life and culture meet. So do check it out. There's your QR code on the screen. Coming up here on Bloomberg Daybreak Europe, Donald Trump vows a tax change to try and woo the support of millions of US expats. We'll bring you the details next. This is Bloomberg.
The United States has one of the lowest corporate tax rates in the world. Hailed as a major success of the Trump administration, cutting the top rate from a whopping 35% in 2017 to 21%, the lowest in about 85 years. Now, that rate could come down even more.
My plan calls for a reduction in the corporate tax rate from 21% to 15%, solely for companies that make their product in America.
It would put the U.S. in direct competition with some of Europe's corporate tax havens. Ireland, Luxembourg, Switzerland, all boasting rates as low as 12.5%. Meanwhile, Vice President Kamala Harris is proposing something much higher, 28%, to help stem the U.S. deficit. That's closer to Italy or Germany, countries with some of the highest tax regimes in the world. So what does all that mean for European companies that do business in America? Well, some of the largest companies in the Stock 600 remain dependent on revenue from across the Atlantic. Take LVMH, which gets a quarter of its revenue from the States. For Nestle, it's about a third. Novo Nordisk, and the number jumps to over half. Now, it's not just up to the next president. Congress will ultimately approve tax laws, but the difference between Trump's and Harris's proposals could make or break some of Europe's bottom lines.
Well, you heard there the dulcet tones of Kriti Gupta, and as if by magic, she joins me now round the table ahead of next week's presidential election. And Kriti, we've seen J-Lo rallying for Kamala Harris, Donald Trump insisting he's the clear frontrunner. Where are we at in these final days of the campaign?
Yeah, well, it is quite literally a race of endorsements as well as it is an actual campaign race. You mentioned J-Lo. LeBron James also endorsed Kamala Harris. This, of course, comes on the heels of some contention around really gathering the Latino vote. And this is crucial in terms of the strategy here, simply because we did, of course, know that in the last couple of days there were comments made at a Trump rally around Puerto Rico and whether or not that actually landed with Latinos. Bad Bunny, for example, whose endorsement Kamala Harris has been seeking for a while, providing his support, but not necessarily giving a full-out endorsement. And there is a little bit of a blurry line there. On the Trump side, you can see that he is actually kind of trying to court the female vote, talking about protections around women's rights. This, of course, getting plenty of flack from the Harris campaign, given his track record and comments around the potential federal abortion ban that could be supported by Republicans. On the other side, both campaigning right now in Nevada and Arizona, really trying to target the cost of living, because aside from gun control and abortion, the top line, the top voting issue is ultimately the economy, Lizzie. And that's really where you're starting to see both campaigners, both frontrunners, talking about this idea that the first thing they're going to be doing in office is releasing a package meant to target the cost of living in the United States. Even though from an economic point, the U.S. is quite resilient, it doesn't feel like a lot of Americans are thinking that way when they look at their bank accounts. And that applies in the corporate sphere as well. That's why taxation is such a key issue. And that's where maybe Trump has a little bit of the edge, given his track record in his first term.
Well, Bloomberg's Kriti Gupta, we thank you as always. And we're going to continue that conversation about tax after the election on this programme. So do stay with us. This is Bloomberg. Welcome back. Well, as Kriti Gupta was just telling us, taxes are top of mind for many expat Americans, the 9 million of them around the world, as unlike many countries, the US requires its citizens living overseas to file income tax returns, even if they don't all end up owing money to the IRS, the Internal Revenue Service. And Donald Trump has pledged to eliminate this obligation if he returns to the White House. So we can talk more about this potential policy now with Josh Pittleman, tax senior at Eisner Amper, who provides tax services to private equity, hedge fund and individual clients as well. Good to have you with me, Josh. You really are an expert on this. I wonder, this policy of no taxes on Americans abroad, how feasible it is that Trump could actually introduce it.
Good morning, Lizzie. Thank you for having me. Well, you're asking what are the chances that it could go through. It's an interesting question. Also, the campaign promise was not they didn't go into detail of exactly what they meant by eliminating the double taxation. Did they mean a complete move away from citizen-based taxation, which would be the most broad sense? That would be a very big change and quite surprising if that's what really would go through. It actually goes completely in the opposite direction of everywhere U.S. taxation has been moving for the last 15 years. So it could be they actually, when they say ending double taxation, they have in mind something more modest, some tweaks and adding some additional relief for expats living abroad. But either way, making these types of updates to tax law is not something that a president would sign in on day one through an executive order. This is the type of thing, as you mentioned, it would need to go through Congress. And so it would probably be, they would be bundling it together with a lot of other tax legislation that the administration is looking to put through.
But I mean, how tasty a carrot is this to dangle at expats? Do you think that it's actually going to change the minds of voters?
Well, my expertise is in taxation, not in voter behavior or political analysis. So, like you said, there's possibly 9 million Americans living abroad, most of them eligible to vote. So there's potential there, but my guess would be as good as yours for how much of an effect that would really have.
All right, but I mean, he's offering lower taxes to companies that operate in the US, and then at the same time, no taxes on Americans abroad. How does that circle square?
Well, like you mentioned, a lot of times people have to file, but they don't need to pay. So a lot of the people living abroad aren't paying anyway. And for those people, it's mostly a paperwork burden, and it is also costly having to hire a professional every year to help you. But at the same time, there are a lot of cases where expats living abroad do pay, especially self-employed individuals who don't live in one of the 30 countries that the U.S. has a totalization agreement with them. And there's other cases where Americans do pay.
Do you think in practice that high net worth individuals are going to start moving abroad to avoid US tax if this proposal comes into being?
That's a good question. I've heard that concern raised by people. And my understanding is I don't think there's any concern of that because the U.S. already has an exit tax in place, which is already designed to prevent people from giving up their citizenship or terminating their residency in order to get out of U.S. tax. So that's already in place. It doesn't talk about this type of situation because the situation doesn't exist until now. But if they pass that legislation, I would assume that they would be just updating the exit tax to apply to cases like this as well.
Okay, Josh Pittleman from Eisner, great to have your analysis on the programme as we consider tax policy heading towards that US election next week. But you can catch up on Bloomberg's new weekend edition now, which I'm sure will be setting you up for the election. We'll bring you a collection of ideas, essays, reviews, interviews and stories every weekend, all exploring the fascinating places where finance, life and culture meet. Do scan the QR code to sign up. That is it for Bloomberg Daybreak Europe. I'm sure they'll be talking about that jobs report that's coming up later in the day on the opening trade next. We'll also be looking out for the market reaction to Rachel Reeves' budget as we continue to digest that. Anna Edwards and Kriti Gupta are on next. This is Bloomberg.